Welcome to today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. We are talking today about some examples. I should have probably clarified this, but we'll just clarify it live. We'll do it that way.
Sure.
3 examples of retirement portfolios, if you will, of couples that put these together. Some good, some bad, or where are we going? I mean, I'll just do it live.
Yeah, I mean, what I'd like to focus on today is the way the accounts are titled.
Okay.
As in retirement accounts, before tax, after tax.
Okay.
Capital gains tax, dividend, and it kind of was apparent to me during this tax season, plus, especially with the new tax laws.
Sure.
That people need some variety, and they need some flexibility, and they need options when it comes to their retirement income.
Okay.
And many people make the mistake of loading up one particular kind of an account, not necessarily investment type, like what you're invested in as far as stocks, bonds, all. And I'm not talking that. I'm talking the way the accounts are titled.
Okay. Now, which leads me to what you have talked about. You've preached this on this program for years, that review with your certified financial planner like yourself, to get that review done regularly,
Right.
A couple times a year at least, to say, is everything in order? Do we need to change things? All that kind of stuff. That's important.
Yeah, it's very important because things, slip through the cracks. Life changes, life comes up, family makeup changes, your situation changes, tax laws change, and it's not just reviews once you're working with a planner, it's getting in early enough, and too many times also people just show up, they say, okay, I'm about ready to retire, so they go see someone, but then it's too late. I mean,
Right.
And that's what most people do.
Yeah.
They don't start in their 40s or 50s working with an advisor. They just work. Okay, we want to retire. Let's go see someone.
Right.
And by then, it's too late.
And then what do we do with what we have, and how do we do it?
We're stuck. Our hands are tied in many instances.
Sure.
It is what it is. I mean, we work with what we can, but the variety is very important if you want to help control your tax liability.
Sure, because and that is, all of this is important. And getting this right, you only have a small window to get it right in your working career.
If you start late, the window's even smaller. But yeah, if as you're saving through your working years, and typically it takes a while to save. Because you get started, you're not even making a lot of money right off the bat. So it takes you some years before you even have money to save in a lot of cases. You
Sure.
get the kids through college, get the kids raised.
Right.
Oh, now we have some extra money. Hopefully we could start saving it for retirement. So yeah, the window's different for everybody.
Sure. Now, the one of the examples that we are going to talk about is couple number 1 who loaded up their 401ks and their 403s and their IRAs, I've not heard of a 357.
457.
457.
Yeah, it's for the government workers, state workers.
Okay.
That's their version of the 401k.
Okay.
403b, those are the nonprofit type versions of the 401k. So those are, in essence, they're accounts that have never been taxed. You
Okay.
put money in it, you get the write-off on your tax return.
Okay, so that's what you get I got it. So in April, before you file your taxes, your accountant or your financial planner says you need to put some money in here to lower your taxes. People did that for years.
Yeah, that's the IRA. So
Okay.
that we can do up until we file our taxes,
Okay.
for the previous year. Everything else, you pretty much have to be enrolled at your employer and
I see.
choose,
Okay.
and it's payroll deducted every pay period.
Okay.
And you could adjust it. Like after tax season, like now, a lot of people are going to go back and have more or less withheld from their employers based on what happened on their tax returns.
Sure.
Yeah, and this is a big one. This couple number 1, this example, that's what I see mostly is people just worked at the plant, Ford or GM, or worked at the steel mill or wherever, and they just loaded up just methodically their 401ks, their retirement plans, which is great because they're saving. for the future. They're saving on current taxation, and they're building their nest egg for the future. The only problem is many of these couples, that's all they did. That's it. They'll have money in the bank for a savings account, and then everything else is in these accounts that have never been taxed.
Okay.
So when it comes time to retirement, or for retirement, if we need an income subsidy, so you say we need to supplement their Social Security or pensions, and we got to go to that retirement savings, every dollar we pull out is taxed.
Oh, okay.
We want to go buy a $30,000 car. Well, we got to pull out 40, or thereabouts, pay the taxes, state and federal.
Okay.
So we have 30 left to buy the car.
Ouch.
Or a rental, or a vacation home, or whatever. Right? And as many people are seeing too, when they start doing this in retirement, if they're taking Social Security, a lot of times as we make withdrawals out of these never before taxed accounts, we take a dollar out, we pay tax on it, but it also causes Social Security to be included in taxable income at either 50% or up to 85%.
Oh, wow.
So once we get over a certain threshold, we're not only going to pay tax on this dollar from the 401k, we're going to pay tax on 85 cents of your Social Security dollar.
Wow.
It's bad. A lot of people get furious about it. So, and if that's all the money they have, in these retirement accounts, that's the only place we can go get money. So our hands are tied.
So what should they have done? I mean, obviously different.
That's after the break.
After the break. Okay.
It's pretty lengthy.
When we come back, we'll talk about what could have been done and what should have been done. Saving is great.
Absolutely.
And you are a big, you have talked about that for years, saving for that nest egg, getting that there. But how to do it is what's important. And that's why someone like Wayne, certified financial planner, at today's retirees, Great Lakes Benefits, they will sit down with you. They will help you put this plan together. And even if you have a plan, they'll look at it and maybe massage it a little bit to make it work better for your family situation. You can get a hold of them at 866-626-3900 or at todaysretirees.com.
3990.
Did I say it wrong?
3990.
866-626-3990. They have it down at the bottom of the screen. Even though I said it wrong, it's there. We'll be back right after this.